Good morning. Thank you for being here. 11/23, Thanksgiving week in the US. So it's somewhat of a short week in the US, but the world continues to trade. That by itself brings some challenges, especially when markets are on high alert. I will have another video either tonight, more likely tomorrow morning. And in it, I will tell you what I'm looking for. The message is simple. You're looking at the S&P. We have had what feels like a sharp dip, and at the same time, it isn't yet. But I can explain all of this. And the cool thing about it is there's an easy takeaway on how to navigate next week and beyond. Today, we will have 3 videos, and we will cover all the tickers that you have requested. There are a couple that were missing, and I added them in there. And if you like this content, give me a like. And if not, tell me why not, so I can get your like next time. Only 10% of you actually say you like it or not. And the comments are open. Let's get started with the first one. Thumbs up, thank you. The first ticker today is Apple. They are alphabetically ordered. Apple holds up well when the market is having a hiccup. That's been the historical behavior of it. In the end, if the market actually wants to go lower, Apple too will go lower. I'm not sure why they haven't passed that baton to NVIDIA or Microsoft, but that's the way it is. So for now, Apple 264 has exhibited support. If that's lost, we can go towards 255. And if that's lost, it has backup support at 242. I'm giving you the big picture in case you're worried about it. I would not expect higher highs in Apple this year. That reaction to the earnings was massive. And quite frankly, I think they need leadership. It will make a new high if it's announced that he's out, Tim Cook. I've been calling for this I can't believe they've been this sane about it. I mean, the guy is nice and everything, but he's just not a visionary. Case in point, their hottest item they just released is the sock bag for the iPhone. And good company to own, good dividends, solid performance. It's a cranker. I would hold it as an investment. I wouldn't add to my investment here. And if I wanted to start an investment, it wouldn't be so bad to pick up a few shares, nowhere near more than 20% of what I wanted to own eventually. Autodesk, good company. It's one of those companies that's never cheap, falling into support just in time for its earnings. Be careful. Reactions to earnings are erratic, as we've seen. NVIDIA's earnings were mind-blowing and mind-bending. They added $10 billion in sales in 3 months. 3 months. They weren't impressed. They still sold it. So I think it gained 400 million in market cap and lost 600 billion lost after that. So earnings quality does not dictate necessarily direction of the stock. For this one, it needs to hold the 280 level. If not, it opens a conversation much lower than this, say by about $20 or $30. You're basically going, and that goes for every ticker, from one support zone to another. We have a support zone here, and we have one below. We also have a lot of resistance above 308. So you're kind of stuck between the support here, 280, and 308. I wouldn't chase it above 308, and I wouldn't panic out of it if it loses support, but therefore I shouldn't be all in case it does, so I can pick it up cheaper. That's the technical look on this one. I don't remember if I had any lines. I don't, but I just gave you lines. Amazon. We shorted it. We made a bundle on it. It was maximum gains. I think we made $1,500 out of thin air per contract. And the concept was when it rallied on earnings, I said, I'm going to buy a debit put spread $15 wide, and I shared it with you in writing. And then the next day, somebody said another, like, oh, it's holding hands with ChatGPT, a ridiculous spike. I said, okay, now I'm going to sell a call spread to finance the debit put spread. Both won, clearly. The credit call spread will die for max gains in January. I bought it back. I freed up the margin. And I closed the debit put spread because it was up to 1350 and I had a long position. I just wanted to close everything. A good win. Now what? it has fallen into a support. You can see those two red circles. You don't want to lose those circles. So if you fall below 210, you're probably going to 193, 194. I'll bring it into view. This says huge pivot zone. I don't know why I said that, but I trust my charts. If we zoom out, we'll probably see it. Now, here's the problem if you come into this strong base, huge pivot zones. These are support zones that should be super strong. So is this orange one. By the way, you're going to catch a theme in my recap video tonight or tomorrow morning with orange. Everything orange matters this week. That's what I'm going to make it very simple. Just focus on the orange. So these are three different support zones. Now, if you get to the second one, you broke trend and you might end up at 185 or lower. You might. It all depends on what the market is doing. The bottom line is it's a great company and has support and backup to the backup. The rally has been huge, extremely large, and like with no let up. It makes a lot of froth. Now, what happens if we have a 2 to 3% rally in the stock market? This one will try to get to 235. I don't think it can break. If it rallies back to the highs, I will reshort Amazon. Not because I don't like the company. I love the company. I'm shorting the stock. Arista Network, an amazing company. Usually it dips for about 15 minutes and they buy the dip and they make a new high. This one is underperforming the stock market. That's bizarre. There might be some specific reasons to it, but that is bizarre. I'll tell you the big picture. First of all, it's miles below the 10-10 debacle. Remember, 10-10, we had a big correction right here. Second of all, this was the Jackson Hole spike from Powell on 822. It's below that as well. There's not one index that's below that level. I don't think there's one stock that's below that level from the big ones that we cover. Maybe Netflix. So what's going on here? They are selling rallies. That's what's going on. Okay, so keep that comment in your head for the big picture. So from here on to 132, they'll hit a lot of sellers. If we are selling rallies, they're not going to take out 132 with force. They will fail there in that region. So 135 becomes a problem. 140, problem. These are real numbers. In fact, I said wall. Yeah, well, obviously that might be there. We can have another one. If I'm long and it gets to 130, I will be out. From a trade perspective, if you're an investor, please don't sell your stock. Just manage your investment the way you do. Okay, so we have had a breakout that's all the way in the 2 digits. We have had a fail inside this. So I feel like they are navigating this January pop and drop zone. Somewhere in the middle is right up below us, and then the backup. So we do have a lot of support as it approaches 100. I wouldn't panic out. I wouldn't add, though, to current positions. I would nibble. And one thing on ANET, that's the kind of stock I would be comfortable selling puts in eventually, not right now. Applied Digital, they are selling rallies. 29 is a problem. If you want to put a line, you can put it on 29. That's an easy line. They shouldn't be able to take it out with force, and if they do, there's one above it, that red one, but that red one will disappear. It's just automatically drawn. So these are two huge problems, making the whole zone above 29 difficult. You do have other areas where it can fail, like at 26, for example. It's not as large a resistance, and that one is more of a zone. So I would be selling rallies. Now this green M you see on my screen inspires rallies. The middle one would be the target 1, the top one target 2. I challenge them to do that without a catalyst. So be realistic with your expectations. Look at where they come. I do like that they came down to the breakout. Back in September, they had a rally that launched 130%. If I was long and I didn't get out here, I should admit to myself I don't have really good risk management skill. Or the only way you do have them is that you don't care. You're in it for 10 years, and it could be at 200. In which case, fine. To me, I'm a trader at heart, even though I'm an investment guy, buying, getting long value. This would be, 130% in 3 months. there's always a dip after that. You can reload. So you can turn investments into trades at least a little bit. Hopefully you did that. So the follow-up breakout is 14. So if you like this company as an investment, and I would need better P&Ls than this, you can sell puts to own shares. Just do your homework. Selling puts at all-time high levels markets is not a great idea unless you really want to own shares. So I do like ARM now, and I don't like ARM now. What? So I do like the levels. It's not a bargain down here, but it's a pretty good company, and it's right at the heart of everything. I don't like ARM that it's doing this while the whole market is still an inch away from an all-time high. Why is this one underperforming? Experts might know something that we don't. Okay, so my take is that that green M that says we might go back to 158 or more is on the verge of being broken. In fact, last week got broken. So if we close below 130 next week, this coming week, that green M is done. So then they're selling rallies, and I would exit on rallies into 150 if I'm a trader. This is a support zone. Look left. Important support zone. I will move it forward. And there's probably another one below it. Yep, better support. So having those two words, you can trade that and create cash. Sell the open 100 for $2. So on the way down in August, we sold puts to buy shares. We made 2%-ish, actually more, 4% or so. And without even looking at this trade. If I did this, I didn't even look at it once. We sell puts when everybody's panicking at levels we're wanting to pick up shares. So we can do the same here. If somebody says, "Oh, I like ARM and I don't know what to do," I'd say go to the end of next year, sell puts, get some cash. Now, the worst case scenario is you buy your shares at that much lower level. Who doesn't want that, right? And you're getting paid for it. But if it rallies, you're not in. That's all the money you make. Well, to fix that, you buy a call spread. Then you're long with no money out of pocket. That's a good candidate for that concept. Technically, 145 or higher, very difficult now. And 158 would be exit for me from a trade perspective. I don't know what that is. This descending wedge is enticing. It says they want to bounce up to 72 plus. To that, I'm saying they're selling rallies, and you want to see when they want to stop. So if I copied, pasted, what is going on? Brain phase. So if I copied this behavior and pasted it, that's what they're doing. At some point, they stop. Maybe they stop this time or maybe next time. Know that this is possible. That's what they've done. On the upside, I'll give you a line where it'll be difficult to overcome. And there might be another one. Right here, 59.30. So these are your lines. You do have support. And if you lose 35.50, you must hold. If you lose this one, 35.50, important, you're going to end up in the low 20s. Yep. Great support, anything below 28. So this is another one. If you want to own it for long term, you sell puts to own shares. Now, do your homework. This has no income. It's a startup. So don't sell puts in startups. They can go to zero, of course. So do your homework and don't go all in. AVGO. We've made money on this one. It's a hassle to trade, even though the company is great. It trades like it's Tesla violently. I'm not sure why. I have a box of support from way back then. I think we can reuse it and move it forward. And we can move these. So what am I saying? We have support and backups. So If the market holds up, this one holds up. If you're looking at this chart and you know your charts, you say, oh, I see a head and shoulders. True. You see a head and shoulders. So if we get to this important pivot comment that was set before the head and shoulders, if we come to this purple one and close, especially on a weekly basis, we're probably going to go to 307 or lower. I don't short a stock because I see a head and shoulders. That's a mistake. And look at that important pivot. No doubt. Look how important this pivot has been. That's actually more closer to the neckline. Okay, so these are big lines to look at. You can go long against these two lines. You say, okay, we've fallen into a super strong support zone. Bounce coming, possible. If it comes and we fail lower, we're going to go lower than that. So if you're actively trading, good job. You do have lines to trade. I think this problem here is big. 357. If I go long here and it goes towards 355 or higher, I would be out as a trader. Okay? As an investor, you can hold this for however long you want. I'm going to delete this old line here and move this guy up here. Now you have a plan. Look at this line right there. You see this circle back in October at 325. Look how close they came to it here in panic on the 14th. So this was too frothy and they still haven't filled it. Yeah, they came down close. Be wary of what happens. September 5th was a big day for AVGO. It moves markets. Boeing, yes. Okay, so Boeing, we shorted it on the way up because I disagreed with the headlines. Only one headline made sense to me. That's the one they didn't spike on. Whenever the frothy headline that came out in this nondescript headlines, they took it to high heaven. We went long, just to take you back. When we dipped in April, we went long by selling puts and put spreads. And when they came up to 210 plus, I was like, okay, I'll balance my long by taking a few shorts. And I sold a credit call spread that I shared with you. I think the most famous one was at 240, that blue box. They overshot into the credit call spread. Every time somebody asked me, what did you do? I said, nothing. This rally is wrong. And then somewhere here, there was a headline of them having the blessing to deliver 2 more planes a month or a quarter. I was like, okay, so that's real money right there. And that's the headline they faded. Dummy market, I'm telling you what, which makes it easier for us to make money. So this was wrong at 130. That was wrong at 240. Somewhere in the middle lies the truth. The unfortunate part is, look how fast they went through on the way up. That was ridiculously bad. So now it makes the floor, so to speak, big. All these holes, they're not good support. So somewhere in here, it will find footing, and I will sell a put or a put spread. But I'm afraid the market is wobbly. So this is in sell the rally mode, but invest. So if I wanted to invest in Boeing for the long term, and I'm nibbling, that's pretty good. If I'm selling puts to own shares lower as an investment, that's pretty good. In fact, I'm going to add it to my list. It's worthy. It's a good company with, it's a duopoly. It has no competition. Their book of business is large. Okay, let's put in some new lines. That purple line, I'm going to renew it. An area of resistance. There are no hard lines when the stock is moving this fast. I don't think we're going up there, so I'm not going to bother with it. Actually, I'll do one. Oh man, that's a messy one. That red one I didn't draw, but it's pretty close to the one I would draw. This is a candle I would pay attention to right there. $10.31, is that the day after the earnings? 10.31 candle, post earns. That's an honest candle right there. If you don't understand that, join me in my next seminar for charting. I'll teach you why that's important. That's a problem zone and supports everywhere. Anything below 160 is support. BABA, we shorted BABA-ish. I sent out a trade to short the EEM, Emerging Market ETF, which is heavy Chinese stocks, on this rip. It made us money. So I put arrows from last time, vulnerable, vulnerable. Look how vulnerable it is. This is garbage, absolute garbage price action. Look at it here. This stock is garbage, not the company, how the stock trades. If you're an investor, that's fine. It doesn't bother you much. But if you're a trader in BABA, you better be good with the charts. So here is not an obvious long or short where Alibaba is. I'll zoom in a little bit to see if I can get us more than this statement. They are selling rallies. You can see how stable they are in selling rallies. I can tell you that 168 plus is going to be difficult. And it's okay to drift lower. So they can continue to sell rallies for as long. Oh, earnings in 2 days. So never mind that. So if uninterrupted by earnings, this is what can happen. Let's see what they do with the earnings. I'm short EEM. I will close my short probably on Monday or Tuesday. I don't have the numbers in my head. I would make a comment. Anyway, reach out if you have a question on that. This is a nuclear energy company, Bloom. In case you missed it, last week there was a headline that shot these companies to high heaven. I think it's a nuclear company, electric technology, electric production. Is it a nuclear company? Manufacturing, installation, solid oxide fuel cell-based power generation. Maybe. Anyway, power company. All the interest in power companies is on nuclear. The group of those stocks, I don't know if this is one of the blessed one, obviously it isn't, is on fire. There's rumors that the government said that they're going to buy however many nuclear reactors. All right, so this one is having a big issue. If this week it closes below a 90, if it closes below 95, it's in danger of going to 55. I'll give you the visual on it. First, I'll tell you where there's going to be some sellers. I would not be long from a trade perspective. Like, how about I rephrase it? Huge resistance right there at 112. More here at 128. There are some levels in between, but that's the big picture. In fact, there should be also resistance here at 101. Now, this was a level they lost. That's the target. This is another level they need to recover. So if they're not above 102, they're in danger of triggering this huge head and shoulders that may get you to 60 to 50. If you don't see it, I'll put it there. I'm not a trend guy, okay? I'm not a trend guy, but you need to hold that, recover that. I'll make it in white. If this fails, you have two targets. That's the mild target. That would be part of normal price action. I mean, if they want to be nasty about it, they could take you this much. There's your risk and opportunity. Now, I see an opportunity when I look at that white line. If you really like it and you have patience and you don't go long unless you see a trigger of sorts, then you let them give you the white line and go long. Sell it, put to own shares if you know it. I don't know it enough. I would never. Best Buy. So this is the only gig in town. And that's the P&L they deliver. It's pretty sad. 2 days, you get an earnings report. Who's to say what's it going to do? It's either it can be at 69 and it can be at 82. It can be at 69 and it can be at 82. Levels. 81 plus should be very difficult. If they go above 85, they can go to 92. That's the opportunity. If they lose 73, they will test 69 or lower. All right, those lines should really help you trade that stock. Come to me on the day of the earnings and I'll look at the options. We freaking nailed most earnings reports. We're really good at that. There are no guarantees, but we've delivered some really good results. Check this out. This looks the same shape here. Okay, who is this? Blackstone? Yeah, pretty inconsistent results here. So at one point they loved it and now they hate it. Is that what you're telling me? Let's zoom out. Okay, that makes sense. That red W on my screen, this is target 2.5. Target 3 is visually somewhere around 126. And they are selling rallies. So now there is a big level of resistance has built up above 160. Anything above 160 is difficult. Anything above 152 is difficult. Check this out. You can't make this stuff up. Look at that blue line from last year, early in the year. Bounce, wick, and then they lost. Look how important that line was. Very good pivot. So anything above that line is going to be hard work. Anything above the other two lines that I put in dashes, I think is impossible this year. So now you're looking to say, okay, are they going to stabilize at 116? They should. If they go below the April lows of 116, then we have a conversation to say, oh, what's going on? And in that case, it'll be at the 100 mark, and it should be a bargain. So if somebody wants to, look at that, be aware. This wasn't too long, folks. My comments down here. Look at this. And then the markets went bonkers. So you can see how much froth there is from this silliness this year. Just be aware that every stock that looks darn cheap can get cheaper. CAVA, wow, good day, 12%. Somebody must have said something after the earnings. Somebody upgraded it. The quiet, I don't know. That's 12%, so figure out why. I wouldn't chase it up 12%. I said to go long on the way down. This should help you make money with it. We've sold puts in this thing a couple times and made money. So selling a put at 35 means that you want to buy shares at 35, then you're at the mercy. In this case, you would break even at 33.20. It's not a bad deal, and it looks like it's not going to give you shares. So you made money out of thin air, and that's a big percentage. $2 on a base of 33. That's a pretty good percentage. I wouldn't add to my position. And if you want to exit and you were worried about it and this brings you out of the trade, you might want to buy a put, make it a credit put spread instead, or just get out of the trade. CHWY. I just made my first purchase on CHWY. Okay, so CHWY I think is recession proof because if I remember, I looked into their sales. More than 90% of their sales are recurring revenues. So people that buy on an automatic basis. That's beautiful. Like nobody's going to stop their dog food or litter purchases. I'm guessing that's what, or medicine because of the tough times. Okay, this blue box, the whole thing is support, and there's support at 31. So if I'm long, I'm not that worried. If I wanted to get long, I can. I should just acknowledge that the market in general might have more downside on it. I think this one is closer to support than a lot of stocks. We'll see how that plays out. Headlines might change all of this, but fundamentally, technically, this is not in danger. But it's not that exciting on the upside either. 37 is a problem. 35.5 is a problem. Okay. And if you lose 31.5, you might end up at 30. This is a stock I would sell puts in to generate income, and if I get assigned shares, so be it. This is the same comment here as well. So it looks like fast casual restaurant just had a good Friday for some reason. 12% on that other one, CAVA, and 4% on this one. Maybe if CAVA is rallying with this one or vice versa. So how is the Domino's headline that shows up on both is propping up those? Anyway, this one, if you lose 29.70, if you make a new low lower than last week, you might end up at 27 or 27.50. That is... Oh, it's Power Racks. Thanks, Mike. So it's even worse. Okay. If you lose this cluster, let me explain it differently. If you were trading fast in my room and somebody saw this, Nick, it's flagging, meaning it's going to go to up there. Well, it's flagging, meaning it can go to 26. I don't think that's the forecast, but it's hard to jump in, add when you don't have any support and you have to go back to 2023. So support is there. It's just everywhere. So it's not a hard line in the sand. If I'm long, I'm long enough. If I want to get long, nibble for the long term, that's fine. Coinbase, I cautioned you many times over. The company could be beautiful. If it's affected by Bitcoin, it's going for a ride wherever Bitcoin goes. If I didn't tell you exactly what happened in all of these stocks, go back and watch all the videos I've shared about this one, Bitcoin, Solana, everything. Everything played out almost tit for tat, and it's just very predictable behavior. So I like coin now because now they have a consistent income, and they tell me in the future the sales are going to be incrementally increasing because they make money in new ways. What I don't like with coin is it is completely tied and a slave to the headlines on Bitcoin and the trend on Bitcoin, like PayPal, like Square, and that other one, SE, for some reason. There are a few companies out there that are hip to hip with Bitcoin prices. This is an obvious one. So you have to worry about its chart, and its Bitcoin. So listen to what I have to say about Bitcoin later, if somebody asked. Okay, so this one, having lost 300, this is the target. I'm eyeballing it. Let's see if that is correct. Target 1 is 60 and 93. That was target 1. And the bottom of the yellow would be target 2. That because they lost that level, they have actually the target is much lower. It's this yellow one because of that high peak. So the higher the stock goes, the lower the target. That's how it works. They overshoot up, they overshoot down, pendulum. That doesn't mean short it to get that. It means that if you got long at 310, don't pile in. Okay, just take another nibble if you want to. I wouldn't do anything, but I would add down in the under 200 or at the 200 levels. This is in danger. 212, 215. This anything below that should be super strong support. Okay, but if you tell me Bitcoin is going to go to 30, this will break below 140. That's my take. Now, going to 30 on Bitcoin is an exaggeration, but I can plan low 50s. I can explain low 50s on Bitcoin. It's not a forecast, but it's definitely a possibility in 2 steps. 10 days ago, we had 4 steps, 98, 88, 72, 55. Well, we did 2 of these. No, we have 2 to go. Okay. So this one is in sell the rally mode. These boxes got filled, so those top 2 boxes, I'll take the fill out. I'm going to leave them there for visual reference. So now they become resistance. As we approach 300, there's going to be a lot of sellers. Everybody that got trapped at 310 will want to get out. If you're looking to invest for the long term and you're taking a few shares, putting them in your coffer, that's fine. Just don't take more than 20% of what you own. This way, if it goes lower, you'll be fine with it. You'll be like Buffett. Yeah, bring it. I'll buy more. I'll buy more. Just don't keep adding days apart. I wouldn't add unless I'm down 20, 30%, or as months have passed. When I know something new, I add. Okay, sell the rally mode until you had a base. And I told you the bases are below us. Costco, we won. I closed my position. So I think we did an iron condor. We shorted it, but he said you can do a put spread or vice versa. I can't remember. I did both and I won. I closed mine early so I don't have to live through the drama. So the trade worked. Okay, you see that white line? That's the same as Coinbase. They lost the baseline. They filled the target. That is the shallow target. That's because Costco is an amazing company. Oh, there it is. This big green box. Look at that. 1121 Iron Condor. So somewhere in October, we said, let's just make income out of thin air. We sold a lottery ticket for somebody who's super bearish at 865. Now I'm remembering. And we sold a lottery ticket for somebody who was super bullish at 960. Somebody said, oh, we're going to go past 960. We said, here's your ticket. They gave us $60. The bottom person gave us $60. So we collected about 100 to 120 in credits. So that's more than 25% reward for 2 months, not even 2 months. Money out of thin air. You only needed $380 to put that trade on. And actually, margin. You didn't put any money out to put that trade on. So if you're interested in those trades, come to the live room. I'll teach you how to do it, and then it'll change your life forever. So Costco is going back into an area that should be a problem. Everything above 920 is going to be very, very difficult. It's a great company, no doubt about it. Consumer spending is going to be difficult. So this zone here and into 920 are a problem. 932, I would exit longs. If you look left, they're selling rallies for months and months, way before the market started. Look at that. Every rally sold and produced a lower low. Why is this one different? Because, yeah, Nick, it's hitting April lows. What? April lows? This is another iron condor for October. We just renewed it. It worked for October. We renewed it. That's crazy. That's money out of nowhere. And then another one. Check this out. On 331, there was a ghost print out of nowhere. Look how important that level was. That was the top. You see it? Right there. Multiple times here and here. There are no coincidences, folks. No, none. Okay, so now by that same logic, look down here where I put the X. That's the April lows. And this is where we are, testing the April lows. So we've been selling rallies. So I would assume they want to repeat these scallops down. So be aware that there's going to be some resistance on the rallies. Anything above that resistance zone, above that is going to be difficult. It's going to be challenging. It's not impossible. If you clear 950, you get some breathing room. So I would... this is the October one. I would repeat this, but you would have to bring this down a little bit. So maybe if you remind me this week, we will throw another credit iron condor. In fact, somebody should have, well, we were already in one. I should have renewed it right away. Anyway, oh, earnings in 18 days. Forget that. We'll wait for the earnings. Circle. All right, so we debated Circle a lot, like a lot, in the live room. A lot of people are confused. Why is this company falling? It's like coin. Its stock price is completely dependent, and I mean completely dependent on Bitcoin, which is what I always say. I don't trade Bitcoin stocks. I trade crypto directly because I only have to chart it, the crypto I'm trading, and that's it. I don't have to worry about anything else. If I get involved with Circle, I would have to track Circle's fundamentals and developments. I would have to track the stock market. It's a stock. And I would have to track Bitcoin. And let's say it's doing well. The stock market is soaring and Bitcoin falls to lows. This one will fall to lows. So it follows the worst of three. So you have three reasons to sell it at one point. Versus if you're trading coins, you're just trading coins. Independent of the market, independent of anything else. Just the coins. So I own their coins and I'm not struggling because it's a stable coin. And it's a good company to own, but we don't know where the low is. It's the IPO price is probably much lower, but it didn't trade there when it opened at 60 and soared. So now it's a sell the rally mode until people and industries, investors, fund managers get comfortable with what it means to be long Circle. Most experts out there are not experts. They're just experts at handling money. They just don't know what the hell this thing is. So they're trying to figure it out. Don't be a hero. Don't add to positions. If I got long at 100, I'm not adding here. If I got long on 100 with 20 shares out of 300, okay, I can add another 20. If I want to get long, I can add 20 out of 100 or 2. And I must leave room to add lower. It's a legit company. It's going to survive, most likely, and as long as crypto exists. So it's a matter of finding a floor. If I sold the credit put spread, personally, I would take the shares, sell my protection for profits, and sell aggressive covered calls against them and try to get out of trouble that way. Reach out before you do anything or if you need some help with that. But I'm definitely not all in at any scenario I said. Who is this? CRDO. Connectivity solution. I don't know what that is. Okay, anything above 148 and 156 should be very, very difficult, and it looks like they're triggering a more downside. So 8 days, the earnings reaction better be positive. If you clear 156, maybe you get to some 168. Otherwise, you might drift into 112. You have support down there. Yep. CRM. It is so weird. CRM used to be hottest stock in our group. Everybody asked about CRM. Now hardly anybody does. This is the company that started everything. They invented the cloud. They told all companies, stop selling stuff. Sell subscriptions. SAS. The concept of subscription models. Everybody went there. Microsoft, everybody. Nobody, you can't buy versions of this and that. Oh, Windows 98. Nope, you just pay. Ongoing. And great P&L, super powerful, cranker. And 238 looks like a huge problem. 242 looks like a bigger problem. Anything above 250 looks darn near impossible for months to come. The green M says we should try it, though. It wants to go to 240, 239, as long as it doesn't go lower than 212, which is kind of a silly statement, but that's how it is. So what am I saying? What the software is saying? This descending wedge, you see how it's pointy? Can snap back rally, can push. Use the rally to fix problems if you're trading. Don't chase the rally. Either go long now and plug your nose to benefit from the rally, or just watch it. In 10 days it reports earnings, and if it drops, in fact, I don't want to say I hope it drops, but if it drops, I will go long again. I think we went long in one. Look at these June 2024. There's another one that's losing April lows. That's another one that snuck by us. I would sell naked puts to own the share personally, but they would have to be much lower because I don't trust the market. Look at how many times it's been here, and every time it's rewarded you nicely. So if I'm long, I'm not panicking, but I'm not adding either. If I want to take long, I can. I'm going to add it to my list right now if it's not there. It isn't. That's weird. Okay, it's not a bad start in spite of the risk of the 10 days. CrowdStrike. Okay, so this was a conundrum for me. They caused debacles, and the market rewarded them by breaking out. This stock gets bought quickly when it drops. I'm surprised how far it's fallen without a rebound. So now I'm going to tell you, if it doesn't take out 520, it's probably going to 450 in the next few months. Not imminent. Don't panic out. Don't sell your shares. In fact, it should go to 520 next. It should try to. So if this week it doesn't lose the last week's lows, it should try to go to 520. Now, if they can't and they go below last week's lows, like if they hit the 470, they're probably going to 430, 440. Those are two real targets. And then in 9 days, they will report earnings. If it dips on earnings, they will buy the dip. But you can see what I'm seeing. If you know what you're talking about, you can see they want to draw the right shoulder of a head and shoulder. Okay, if you can't see it, it wants to do this. That's the natural progression. But if it cannot take out 520, 530, 540, and it fails, now they've drawn a head and shoulders. And then they might dip, do this and that, and that's how they get to 440 minus. That's a potential path. 9 days, they report earnings. Everything is out the window. But that's the natural progression. That is a potential path. Don't short it because I drew this. This helps you manage your longs. If you're okay being long here and at 440, there's nothing to do. If you're okay being long here and at 440 and you don't have a position, you can take a long. You can sell a put spread, buy some shares, buy some calls or call spreads. CoreWeave. The conversation with Circle that we had with this one here, the same. Brand new company. The only difference is it's not tied to Bitcoin directly. And it is an AI concept. So now the AI is a bubble. I can prove it to you. That's my concept, the idea of it, but it's at the early stages. So the .com was a bubble, but every concept was a winner. It just took time to develop. That's it. If somebody stuck the .com, even if it was pets.com, shoppingcart.com, webvan.com, whatever.com, they would have all been bazillionaires now had they survived, right? Okay, what brought them down? Debt, function, cash. There was no business. Okay, this one has a business. It provides AI services, and and it's partially owned with NVIDIA, etc. So whatever NVIDIA gives money, some of it is coming back to CoreWeave. For example, NVIDIA gave money to OpenAI, and OpenAI gave 22 billion of it to CoreWeave in business. And it's a circle, right? I called it the circle jerk of AI. It's the same freaking money that goes from one company to another and comes back to it in slivers. And then it branches out. Well, this is one of the branches. So it is supportive here or lower. So again, here, if I have a credit put spread, I personally would say, give me some shares. I would sell the protection and then deal with the shares itself. I would sell really aggressive calls. Or to avoid the whole thing, roll the spread forward until they find their widths and levels. Luckily, it's not a big dollar stock like 300. So a lot of people can own 100 shares of it. So use your, don't be so aggressive assuming it's a bottom. It is a bottom if the market is bottoming. So we'll see. It's an important zone that doesn't have a lot of history. It's a relatively new stock. I believe the IPO was lower and then it soared. So if you miss the IPO, you can probably sell puts in the 30s on a bad day from last week. So I'll put CoreWeave on my to-do list. If I'm not long already, I would do that. I don't remember if I have it in my account or not. I have to check. Carvana, I would avoid at all costs. Avoid the whole industry, the car industry. We might have a Carmageddon on our hands. I don't know. Check their financials. It's a good sales growth, but if they're bleeding cash, check their financials. I don't know if they are. Just do your homework. Too violent for my taste. The car industry is not that great. I was in the car industry. I know it's the insiders and outs. There's very surprising things. CarMax just got shellacked on something, I think, no? Okay, so 260 or lower would make for better position starts. If I'm long now, I would not add because we might be at 260-ish, okay, where there's better support. DXCM, the mystery stock. I thought this was a no-brainer entry. I don't think that was as much as a no-brainer as I thought. They're selling rallies. Look at this. This is amazing when you copy-paste this bad boy. Let's say we started here. Look how well they repeat the performance. This one here fits just like that one. You see it? So, not to say that's the forecast. They're selling rallies until they hit a floor they like. They just lost the floor in the April. So it's imperative for this stock to get above 65. That's what I'm going to say. Get above 66, the berry 65. You must get back into this blue box. What does that say? That's an earnings reaction. One day. Whoa, was that telling? This was the range. You need to get back inside this box. Price to sales. Let's see the price to sales. I think I built something here. Maybe not at this timeline. Yes, it is. Yay. Price to sales, 5. So that's a low price to sales. It was 7. Every time. So decent investment for the long term if you know the company. Last action lawsuit. Deceptive outlook. Oh. Okay. Oh, a nothing burger. Yeah. Anyway, so there's some talking points. If I'm an investor, I'll sit tight. I can nibble. Okay, with that, we end video 1.